How will Bitcoin perform next week? If you're interested in knowing more about this, please keep watching. We'll start by looking at the weekly chart. Why? Because it helps us understand the overall trend. Once we have a grasp of the weekly trend, we can switch to shorter time frames to identify potential opportunities. Currently, it appears that we have completed a pullback in the weekly trend, which consisted of two phases: an initial rise followed by a correction, and then another upward move. By referring to the previous price action, we can gain some insight into how the upcoming phase might unfold. Although it may not be as strong as the previous rally, as the volume is not as strong as the one in the previous rally, the structural analysis suggests that another upward move is certainly possible. The question is, how high can Bitcoin go? Let's explore that. Why haven't I closed my long position yet? It's because I'm hoping to ride on a larger trend. As you can see from the previous rally, when we went from $15,500 to $30,000, how should we capitalize on the market movement? It would be ideal to enter a long position near a potential bottom. For example, around $19,000, or the range of $18,000 to $19,000, which we previously discussed as a potential entry point for long positions. Even if there are minor pullbacks in between, it's not necessary to be concerned about them, because our objective is to capture the overall upward move. The best approach to capitalize on it is to hold onto the position until we reach a point where a trend reversal occurs. Only then should we enter. That's the best scenario. For example, we go long in a bull run. Conversely, if we engage in frequent buying and selling within a bullish trend, we're likely to miss out on substantial gains. Recalling the previous rally, we experienced an immediate bullish trend reversal after a significant drop. Many traders were caught off guard. If we hadn't held any long positions at that time, we would have missed out on a significant portion of the profits. Or at the very least, we wouldn't have been able to capture any gains. Now, let's examine the potential upside of the current rally. We can make a guess. Based on the previous bull cycle, we reached the 0.618 Fibonacci retracement level of the preceding bear market's decline. This is a classic case of a 0.618 retracement. As you can see, after the decline, we experienced a rebound. Well, it further declined after that. Now let's take a look at the current market situation. The current market landscape indicates that the overall rebound has only reached around the 236 Fibonacci level. If we were to reach the 618 level, it would correspond to a bounce of around $48,000. I believe the target price is a bit exaggerated if we compare it to the previous cycle. Moreover, I believe that the volatility of Bitcoin gradually decreases with each market cycle. Now, let's take a look. Suppose we want to measure the target price of the head and shoulders formation here. We have a head and shoulders formation here. If we measure it by moving the neckline upward, we will get. This method is quite simple and suggests a target price of around 0.5, which corresponds to slightly above $24,000. We can estimate a target price of around $40,000. If Bitcoin were to experience a similar price movement to the previous rally, it would be worthwhile to hold a position based on at least a daily time frame trend. Let's zoom in on a smaller time frame. Currently, we are in an oscillating phase, and we have found support at a specific level. Where is it? Here. Why is this price level acting as a support? This level has supported the price for at least 3 distinct occasions, which is evident due to prior testing of it as a resistance. After an upside breakout, this level turned into a support level. As you can see, if we were to break below this white support level, I believe that the pullback would go further, and the risk for long positions would increase significantly. At the moment, we are still within this range-bound period, indicating a relative consolidation phase with a narrower range compared to the previous uptrend. In other words, the price moves within a box. After an upward movement, this type of adjustment is typically considered healthy. If, after the uptrend, we were to enter into a wider range consolidation phase, it would suggest a higher probability of a trend reversal. Based on the current market conditions, we can also make some initial judgments based on the distribution of trading volume to determine if it's in a distribution phase or a continuation phase. From the current situation, I don't believe it's a distribution phase. Why? If we ignore the candlestick here, which has a long lower shadow and was influenced by news events, if we exclude that candlestick, we'll notice that after the sharp surge and significant volume expansion, the subsequent price action has been accompanied by low trading volume. This kind of subdued volume is often seen during periods of consolidation and indicates a continuation of the upward trend. If it were a distribution phase, we would expect clear bearish volume in the box pattern or at least overwhelming bearish dominance. Currently, we haven't observed such conditions. In the case of Bitcoin, it's usually best for it to remain calm during holidays, at least without experiencing sharp surges. This is because if there is a surge, there is a possibility of a retracement to fill the gap on the CME gap chart. Currently, the CME gap is closing around 30,400, slightly below the current market level. It's generally better for the market to remain stable during holidays, as any significant movement could introduce additional risks. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.